Hey everyone, John CC. I'd like to officially welcome you to the second episode of The Open, a weekly series hosted by me every Monday for the Weekly Open, where we break down and discuss technical analysis of Bitcoin and what we can expect for the coming week. Before I jump in, just want to say thank you to all the viewers on the first episode. I really appreciate the comments and the support that I've received, and the suggestions were also very welcomed as well. Took them to heart and will look to improve upon them in the future. So, without wasting time, let's just jump in right into Bitcoin Weekly. I mentioned before that what we look like we're in right now is possibly a wave 4 correction, maybe finish. If we start to count here, we have the wave 1 coming up, the wave 2. This would be a wave 3, 4, 5. But we continue up further. So this looks to be an extension 1, 2, 3, 4, 5 for the wave 3. And ABC potentially for the wave 4 correction. And we could still be in the wave 4 correction, or we could be coming up to make what looks to be our wave 5 and complete this impulsive series. So we do have our resistance here, 20K local top. Here is an order block at 17K, another one 20K. So yeah, it looks to me like we're about to come up and hit here. We could correct a little bit longer, not sure. Let's go and break it down by taking a look at the daily. So I've already earmarked a couple pieces here. This looks to be, this looks to be our range low. Here is our point of control, equilibrium point, and here is our range high. Of course, this is the high that we want to break, but for the time being, this looks to be the order blocks that we're dealing with at the current moment. So I'm not quite sure what's going to happen yet. My bias is that we are finished correcting and we're going to start our way up, as this is an ABC 335 flat. We could come back, retest this point, which is what I'm sort of leaning on at the moment, around 10,100. This is the 50% retrace from this move here. We could come down a little bit further, maybe to the 618. This is around 9,700. And if we come back down here to retest this range low, I think that my count might be wrong. And of course, if we break, then we're going to be in a little bit of trouble here. So we want this range low to hold, especially for bulls. I do think we're going to come down here. I'm not quite sure what's going to happen yet. We could continue grinding and oscillating before we make our move up or consolidation. Not sure yet. So let's take a look at our Elliott wave count. If we look at the 4-hour, here are the EMAs. We are currently rejecting under the EMA resistances. We had a little bit break here of the 200, broke through the 100 right here, the purple line, and we're now consolidating and rejecting a little bit on very, very weak volume. We are still in this order block from previous order block resistance, once a support, and we did bounce off of this order block as a support in the 9,000 region. So if we look at last week's episode of The Open, we talked about the potential of this being a triangle. It didn't play out that way. It looks like to me that this move, get rid of this. It looks like to me that this move is possibly a 3, 1, 2, 3, 3, 1, 2, 3, 1, 2, 3, 4, 5 flat. Now, I've received a couple DMs on Twitter asking me, hey, John, what's up with the deal with the wave 1 and wave 4 overlap? So, my personal opinion about Wix is because when Elliott wave theory was first developed, there weren't so many crazy abstract wicks. There weren't that many algorithmic bots trading. There were none, actually, because Elliott discovered or formulated Elliott wave theory in the early 1900s. So in the 30s, 40s, after the Great Depression, we was charting on the weekly and the monthly. You didn't get these crazy abstract wicks. So to me, I take wicks kind of flexibly. I'm only concerned predominantly with the body of the candle, of the close. If you read Neely, he talks about his theory on mono waves. He looks for the true value of the candle, which is pretty much the close, not what happens in between. And of course, he was also counting on daily, weekly, and monthly timeframes, not really on the 4 and 2 hour, which are going to give you a lot more information that you don't really need, based on the fact that there are a lot of bots trading nowadays. Like there's a huge different scenario with regards to counting the wicks. So I take them very flexibly. Now, with that being said, in this scenario, I don't consider the overlap a bad thing because I'm considering this as a terminal impulse. This was first brought to me by my buddy Psychonomy on Discord. Talked to me about the potential of this being a terminal impulse. And if you guys are looking to know more about what terminal impulses are, you can check out this video on YouTube. Just search terminal impulse and check out the video by Tickmill, excuse me. And it talks about how terminal impulses will form a 1 2 3 1 2 3 1 2 3 1 2 3 1 2 3 3 3 3 3 3 5-way move down, where the 1 and the 4 will overlap. Now there are a couple other rules in regards to terminal impulses, like such things as timing and fib retracements. Psychonomy, he did a review of that right here. So yeah, I'm not going to go into too much detail. If you want to check out more about it, you can check his Twitter out. He posted an update. So yeah, what we have in terminal impulse is the 2-4 control line being the point of control for a trend shift. So this is the way I'm counting it, as a terminal impulse: 1 2 3 1 2 3 1 2 3 1 2 3 1 2 3. So that checks out. And I drew the control line from the 2 to 4, and we had a really strong impulsive break. So I wasn't quite convinced whether this is going to be a trend shift or the correction was still ongoing. But the fact that we had this huge candle, like literally $800 in about 15 minutes, I think this is a 15-minute candle, that signified to me that there's potentially a trend shift. We had the terminal impulse completing. And so that is the reason why I'm allowing the wicks to cross here. So at the current moment, my bias is that we are starting a new impulsive wave up. So this looks to me like a 1 2 3 4 5. And what we're getting now is a 1 2 3 ABC correction. Posted this chart in my Discord a while back. This was kind of what I was expecting. Yeah. And so we are currently playing this out quite well. Yeah, I'm looking for a retrace into the 50% area, which is around 10,000. There's also potentially a 1-1 here, or the 618 around 9,700 or 9,800. So I do think that this is the start of a new impulse, and this is potentially a 1, 2, and then 3, 4, 5. Yeah. So there's a couple of different iterations. I'm not quite sure yet. If this is our A wave and we do a fib retracement, yeah, we have a 1-1 that will take us around to 9,800. Let's take the retracement from the bottom to the top of this range. 9,800, 618, so golden pocket. So we are kind of flirting with that zone. There's another possibility that we could be in a flat like this. Not quite sure yet. I'm going to let the PA play out. Now, there's also some other cool scenarios posted by some friends on the Discord. First one being Bartney's post. Barney thinks that this is potentially an ABCW. And now we get an ABCF for an X. And we correct further down to, I think this is a bit low in my taste, but I think at least to somewhat the CMA gap around 8,500 to make a Y wave. Yeah, I can totally see that as well. It seems legitimate. So if we take this 4 out here, yeah, this is an ABC A, B, C. So that would be a W. You get an ABC up for an X. 1, 2, 3, 4, 5. A, B, 1, 2, 3, 4, 5, C for the Y leg here. Yeah, let's take a quick look. Yeah, you can check his Twitter out. He posts some charts on, yeah, what he thinks with the cloud as well. Not quite sure yet. Reno also has an interesting count, an interesting take as well. He counts the same way that I do, as an ABC with the 5 waves down here. And this could be a WXY or an ABC. Same thing as what Barney posted, ABC. And yeah, if we come up here for an ABC, WXY, whatever, and hit this, we could reject and come back down to form the WX and then the Y. So these are all different scenarios that I'm keeping in the top of my head. You can check out Reno's Twitter. I think he posted this and has a good description on his Twitter. Oops. On the counts. So regardless of whatever scenario that we're in, whether this is a completed 5 waves down, the flat is over, and the wave 4 correction is done, or this is a WXY and the correction ends around here, it looks to me like the next move is long. And so I'm preparing to long. I've had a couple of scalps ready, but I'm just waiting for whatever correction that we're in here now, whether this is an ABC flat, this is an ABC zigzag like so, or if this is some sort of triangle like Reno and Barney think like this, the next move for me is going to be long. Whether this is going to be a swing play or an intraday play, I will long, take some profits at the order blocks as they come. My bias is that we're going to continue further up, but not so sure yet. So let's let the PA play out. And yeah, that's pretty much what I'm expecting for Bitcoin throughout the week. Now, I highlighted before about Bitcoin dominance. Bitcoin dominance, like I said, was approaching the last point of resistance around 70%. What did we do? We hit 70% almost on the dot. This top resistance before the wick from the last move in December. And then what happened is we had a huge drawdown. If you remember what happened from December to January of 2017 going into 2018, we had the most craziest bull run, right? So we had a divergence here, as I pointed out. We had the price making a higher high and the indicator making a higher low. And what did we do? We rejected. Momentum is now completely bearish. We had a little bit of an alt rally, nothing too crazy. But what I'm looking at is, because we have a 1, 2, 3, 4, 5 completed moves, I think we're going to get some sort of ABC correction into these high volume nodes here. These will act as supports. And so right when we get the actual dump of Bitcoin dominance, I don't know what it's going to take. We are kind of lagging here. So if we take a look at it, indicator is coming down. We didn't move down too much, but this area, which is now resistance, is probably going to be some sort of support. So coloring really lightly. So we could get into this area, bounce, but if we slice right through, because we do have the momentum on our side, we could get an alt rally. So this is a really great chart posted by CryptoFonts in Discord, pretty much highlighting that every time we had a lower high in Bitcoin dominance, we end up getting a lower low. And these are all periods that signify Bitcoin dominance falling and getting a crazy alt rally. Here is the beginning of, I believe, 2017, when we had a massive alt rally in Ethereum. This is when Ethereum went from, I think, $20 to $300. Here's another one, 2018. This is when everything was blowing off. So Bitcoin dominance has to only go down maybe like 10, 20%. And when it does, alts are going to see a huge rally. So pretty much what I'm saying, guys, is don't sleep on alts. I know that a lot of people are complaining, where is our alt season? What is happening? The money, I don't think there's enough retail money flowing in, but I think that there's enough money in the market right now to start flowing into alts, especially Ethereum. I think Ethereum is going to have a big season coming up. There's a lot of futures contracts that are starting to look into Ethereum, starting to list them. Bitcoin is getting a lot of the attention, but don't sleep on Ethereum. Look at Ethereum's chart. It looks really similar to Bitcoin. 1, 2, 1, 2, 1, 2, 3, 4, 5. So that's a 3, 4, 5. It looks like it's extended quite nicely, double extension. I think that Ethereum is going to have a bigger role coming up in this next season. I believe that with Bitcoin dominance dropping, Ethereum will have a much larger impact. I think that there's a lot of things happening within the whole alt scene that we're kind of underlooking because Bitcoin has been on a historic rise with institutions coming in, gets people dropping gold to invest in Bitcoin. But don't sleep on Ethereum. And for me personally, I will be heavily longing Ethereum a lot more than I'll be longing Bitcoin at the current moment, just because dominance is dropping and I'm liking what I'm seeing from the chart. So guys, everything mentioned in this video is an opinion. Nothing is considered financial advice. With that being said, that's all from me. I'd like to thank you once again for tuning into the second episode of The Open. I'll be back next week with another fresh episode where we talk about Bitcoin and what I'm looking at for the week. But overall, guys, I'm wishing you a great trading week and stay safe. Always remember, let the profits come to you.